of the Board of Ed, because this is a joint meeting, so we both keep minutes and both call our roll. And then we will turn the floor over to you.
Okay, thank you.
And Matt. And Mike Washington. And Mayor.
Bill, how are you tonight?
Good, thank you. Been better, but doing fine.
I know. Not too much pain?
So it is, no, not yet. Still waiting for it to kick in.
All right.
Wait till the surgery. That I understand that I should have it. So
ouch. That'll do it.
Yep. So it's 5:30, and this is Councilor Bill Solms. I'm going to call this joint meeting of the Ledyard Town Council Finance Committee and the Ledyard Board of Education Committee to order. Mike Bronner, who is the finance chair for the Board of Ed, will call the meeting separately. And I'm just going to read off the roll call. President R, myself, Deb Dobson, Mike Bronner, Mike Washington, Tom Malone, Brandon Graber, Nicoletta McTeague, and Matt Bonin from, oh God, help me. I should know this, from our auditing firm. Councilor Andre Ingalls, member of the Finance Committee, Mayor Allen, Superintendent Jay Hartling. You guys are all moving around on me. Board of Ed member Joanne Kelly, Board of Ed Ledyard Ann Hogston, Council Chair Linda Davis, Mayor McGrattan, Councilor, Mike Washington, Councilor, Pat Webb from the Board of Ed, Rachel Moser from Board of Ed, I say yes, and Steve. Who is Steve? Who am I missing?
Just Steve Munger. I never sat in on
Steve Munger. Hi,
meeting,
Steve.
so I
Welcome.
just tried to sit on one.
Yep. Thank you.
Bill,
so that,
see Roxanne.
Oh, right. Of course. I knew that. Thank you. So Roxanne Marr, who is administrative assistant to the Ledyard Town Council. And that concludes our roll call. So I'll turn it over to you, Mike Bronner.
Hey, thank you. This is
Marcia Hancock. I'm sorry. Go ahead.
Okay, yep. This is Mike Bronner from the Ledyard Board of Education, calling the Ledyard Board of Education Finance Committee meeting for this joint meeting to order. Mr. Solomon has already done a roll call, so I won't repeat that request for names. We have those all logged and we'll reflect them in the minutes accordingly.
Thank you. So now I'm going to turn it over to Nicoletta McTeague from our auditing firm, Bloom Shapiro. And Nicoletta has a presentation that she'll be sharing with us. All yours, Nicoletta.
Thank you, Bill. Good evening, everybody. With me today is Matt Bonin, and we are going to give a presentation of the results of the 2020 audit and can answer any questions. Presentation is going to be informal, so if you, while I'm going through the presentation, have any questions, feel free to interrupt, or you can ask questions in the end. And I'm going to share the presentation right now. Second, so if someone could tell me if you can see my screen.
Yep.
Okay. So on this slide, I have the agenda. I'll go over the terms of engagement, an executive summary. I'll go through some financial highlights, federal and state single audit highlights, required governance communication, management advisory letter, upcoming GASB pronouncements, and the announcement about the merger of Bloom Shapiro with CLA. As far as terms of engagements go, we were engaged to express an opinion on whether the basic financial statements are presented in accordance with GAAP. In addition, to express an opinion in relation to related to the schedule of expenditures of federal awards and schedule of expenditures of state financial assistance. We were also engaged to express an opinion on compliance related to the state and federal programs. In addition to what I just listed here, we are required to provide a report on internal controls over financial reporting and compliance with laws and regulations in accordance with government auditing standards. That report is bound together with the state and federal single audit, so it's the same report reported on, bound together on both state and federal single audit reports. And only a reference is made to that report in the audited financial statements report. In addition to that, we were engaged to provide a report on internal controls over compliance related to major federal and state programs that we tested. As far as financial statements go, we issued an unmodified opinion on the basic financial statement, and that is the best opinion available. So that's good. Regarding the report, as I mentioned before, that we are required to issue a report on internal controls over financial reported. We repeated the significant deficiency that was there in the last year that's related to significant audit adjustments that were needed during the audit across multiple funds. So even though there were different journal entries this year and the management has done market improvements year over year, there are still several journal entries that are needed to complete the audit and to issue the financial statement audit. As far as federal single audit goes, that was a clean report. We expressed an unmodified opinion on major federal programs that we tested, which means that there were no compliance findings, and we did not have any findings related to internal control over compliance. Same thing with the state single audit. The report was clean. The opinion we expressed on the major state programs that we tested was unmodified, and we did not identify any significant deficiencies or material weaknesses in internal controls over compliance related to the state single audit programs that we tested. So all good news on this front. In the next 6 or 7 slides, I put together some financial highlights and information that I took them out of the audited financial statements just so we don't have to go and flip through pages of the report. In this slide, I have a summary, a comparative summary for both years for governmental activities and business type activities for the town, or otherwise we call them government-wide financial statements. Included in this slide are all the funds of the town with the exception of trust and agency funds such as pension plan or student activity funds. As you can see from this slide, the net position at year end was $84.9 million versus $84.5 million in prior year. So the increase, it was only about $300,000. Of the $84.8 million, almost $93 million is invested in capital asset. There's restricted $71,000, and the unrestricted net position is actually a deficit of $8.1 million. On the next slide, I put some of the items that change year over year that I presented on the prior slide. Capital assets increased by $1.7 million to end at $138.6 million. And the increase was mostly due to the Ledyard High School track and field project. Included in the liability in the first slide were net pension liabilities of about $5.1 million, and they remained virtually the same from prior year, was only a slight increase. Total other post-employment benefits, or as we refer OPEB liability, increased by $1.2 million to $12.8 million in the year. And that was mainly as a result of a discount rate, which decreased from 3.87% to 3.5% in the current year, which was a result of the change in the index rate for 20-year tax-exempt general obligation municipal bonds. And included in the liabilities on the government-wide financial statements are general obligation bonds and notes, which includes some premiums, and they decreased by about $2.9 million for the year, and there were no new bonds issued during the year, only notes. Moving on from the government-wide financial statements, in this slide, I included the fund balances for governmental funds. Each column here represents a major fund. So general fund, capital projects, and capital projects are major funds, and all other funds are included in the column non-major governmental funds. So governmental funds for fund balances at year end were a total deficit of $4.1 million. And included in that total is a general fund of $4.6 million, capital projects of $11 million deficit, and all other non-major governmental funds at $2.4 million. I included there the change year over year, so you can see how fund balances for the governmental funds changed. And as you can see, the net change in total was a decrease of $4.4 million. The majority of it came from the capital project fund. General fund decreased by $137,000. And the fund balance at year end, $4.6 million, all of it was unassigned. And that represents 7% of the total general fund expenditures and transfers out. Capital project funds, as you can see there, decreased by $3.5 million, and that was mostly due to the school project expenditures that are being carried out by the fund in advance to permanent financing. And non-major governmental funds decreased by $883,000, and that was due primarily to transfer out of $966,000 from the Mill Rate Stabilization Fund. As you can see there, under non-major governmental funds, there is an unassigned negative amount of about $11,000, and that belongs to the School Readiness Fund, which reported a deficit fund balance of that amount. In the next slide, I put some historical information of the general fund percentage of unassigned fund balance to expenditures and transfers out. As you can see, even though it looks like it's a big difference year over year, they are all in the range between 7% to about 7.6%. So unassigned fund balance over the expenditures and transfers out. So as I mentioned prior, the general fund for fiscal year 2020, general fund balance, the unassigned fund balance is about 7% of the expenditures and transfers out. As far as the budget numbers go for the general fund, they are reported in the required supplementary information in the bond report. Property tax collections totaled about $39 million, and they were $195,000 lower than budget. Current year levy collections were $38.2 million, or 98.11%, compared to last year's collection rate of 98.66%. Total revenues and transfers were lower than budgetary estimates by $8,000. Expenditures were $1.9 million lower than budgeted appropriations, and this was generally due to budgetary compliance in every expenditure function. During the year, there were additional appropriations of about $2 million, which were funded by fund balance. Included in the financial statements, there is a section for business type activities and internal service fund. Business type activities are the two enterprise funds for the town, water and sewer fund. And in this slide, you can see the net position of these funds, which is a total of $22 million. And for year over year change, there was a decrease of about $254,000 over prior year. And an internal service fund ended up with net position of $478,000, which was a decrease of $254,000 from prior year. As far as fiduciary net position goes, pension trust funds reported a fund net position of $26 million, and that represents an increase of $899,000 from prior year. Included in the fiduciary and acquisition statements, you see that employer contributions to the fund were about $1.1 million, and they were in line with actuarially determined contribution. Net investments for the year were about $1.1 million, and benefit payments and administration expense were $1.5 million. So overall, the year ended with $899,000 increase. So these were the highlights I wanted to bring to you regarding the financial statements. From the next couple slides, I'll move into the state and federal single audit results. Total federal awards expended by the town were $2.8 million. And major program tested was impact aid of about $1.6 million. And as I mentioned initially, the federal single audit report was clean. We expressed an unmodified opinion on the compliance for the impact aid program, and we did not identify any issues with internal controls. For state single audit, the town expended $16.9 million in state awards assistance, and out of that $16.9 million, only $3.1 million were subject to audit. The rest are considered exempt. We tested 4 major programs, as I have listed on this slide: municipal grant and aid, town aid, road, early care and education, and vocational agriculture. Again, as I mentioned initially, we issued an unmodified opinion on all these major programs, so there were no findings on compliance. Also, we did not identify any internal controls related to the compliance. Another report that we issued is the auditor's communication report. It's about 2 or 3 page report, and every year at the end of the audit, we are required to report to you to those charged with governance certain items. And in this slide and the next, I have listed all the items that we are required to report to you. There were no new standards adopted in the current year. Financial report includes several estimates as listed here: net pension liability, total OPEB liability, capital asset useful lives, and allowance for uncollectible receivables. So the reason for these estimates being listed here, and you being aware of this, is that if the estimates used by the management would have been different, some of the numbers in the report could have been significantly different than what they are. For example, net pension liability, which, as I mentioned, was $5 million. If you go 1% lower or higher on the discount rate, those liabilities could be plus or minus a couple $1 million. So it's important for the reader to understand that those items that are listed in this slide include some estimates, and so the numbers could be different if the estimates that management used would have been different. Included in the auditor's communication letter, there are a few other items. So we did not have any disagreements with management. Management did not consult with any other accountants. We did not have any difficulties performing the audit as far as like dealing with management. There were no uncorrected misstatements, which means that all the journal entries that we proposed as part of the audit were approved and recorded by the management in the general ledger. There were no independence issues for us, which means that we could perform the audit as independent auditors. The last report we issued was the management advisory letter. Again, I want to emphasize the fact that these findings I'm going to go over do not signify any significant deficiencies or material weaknesses. They are just recommendations to management to take in consideration for improvement of internal controls. So during our audit, we noticed that we couldn't find any indications of a supervisor review of the bank reconciliation, and that was entity-wide, meaning it was for the town and the Board of Ed. So we recommend that a formal review be documented, which could be someone's signature and or initials and date when it was reviewed. just to so we know that those bank reconciliations are reviewed by management. As far as Board of Education, we had 2 comments related to the general ledger. The first one is about general ledger, special revenue fund accounting. There were a couple funds in the general ledger that the balances were not, they were not reconciled when we did the audit. So several journal entries were needed, and they were for the school lunch fund and the grant fund. We did not find any indication that during our tested that invoices were approved. So similar to the bank reconciliation, there was no formal documentation of this invoice approval. So we recommend again that those invoices to either be initial stamped or somehow to be some form of documentation the invoices were approved for payment. In addition to this, the first 2, the Bank Reconciliation Board of Education findings that we had, we repeated a few findings from prior year. The first one is the information technology controls. About 3 years ago, Bloom Shapiro issued a report to the management with some findings related to the IT. We just recommend that management continue to review and implement those findings as necessary. Uniform guidance procurement standard was another comment that we repeated from prior year. So a couple of years ago, uniform guidance required that all entities that receive federal aid should be updating their procurement policies as it applies to purchases made with federal money in order to comply with requirements from the uniform guidance. There are several requirements included in the document that the town and the board should review carefully and make sure that all those elements are included in the town's written policy. Allowance for doubtful accounts. This again is a repeated comment that we recommend that the allowance be reviewed every year and adjusted as appropriate instead of carrying year over year the same amount in the general ledger. And the pension fund activity is not entered in the system in the general ledger frequently, so it's not entered in the general ledger. So we recommend, so at least monthly, the activities should be summarized and posted in the general ledger. So this is a summary of what is included in the management advisory letter. For the next 3 years, there are several standards that are going to be effective, but not all of them are going to apply to the town of Ledger. For fiscal year 2021, Statement 84 is going to be effective. This statement was actually going to be effective for fiscal year 2020, but because of COVID, GASB delayed, issued GASB number 95 that delayed implementation of several pronouncements by at least 12 to 18 months. So 84 did not get implemented in 2020 because it got pushed for 2021. And basically that will take, this statement will require towns to review all the fiduciary activities and to ensure that they are appropriately reported in the system. So funds such as, let's say, performance bonds that now might be as agency funds, in the future they're going to be part of general fund as assets and liabilities. So we have a questionnaire that will walk the town, the management through how to, if there are any changes, how they are going to affect the town and how to go by implementing GASB 84. Statement 90 is not going to, 92, not going to have any impact on the town, so I'm not going to go over it. For fiscal year 22, Statement 87 leases, it is an important one. And actually out of everything that's listed on this page, Statement 87 is the one that will have a real impact on the town. So basically, currently, Any capital leases are recorded in the government-wide financial statements as liabilities for the town, and any operating leases currently are reported as a note to the financial statements. When GASB 87 is implemented, any leases that the town has, regardless if they are capital leases or operating leases, they are going to represent a liability for the town, as long as those leases are for more than 1 year. And if the town, so this is if the town is a lessee. If the town is a lessor, then the town is going to report a receivable, so we'll report an asset in the books for those lease agreements. So it's important that the town, and we've had a discussion with management before, prepare an inventory of all the leases and all the terms of the leases, so when time comes to be implemented, that information is available. Even though the effective date is for 2022, the information required to be available is for July 1, 2021 for the beginning of the year, because the change of the leases activity for the year is needed when fiscal year 2022 is reported, all the activity. I'm going to skip over the other gas because they are not going to have any effect on the town's books. And fiscal year 2023, the same thing. None of the gas bills that are going to be effective in the year, as far as I'm aware of, are not going to be affecting the town record. So I'm not going to spend any time on them. And my last slide in this presentation is about Bloom Shapiro. Effective January 1, 2021, Bloom Shapiro merged with CLA, Clifton Larson Allen. And we changed our name to CLA. CLA is a national accounting firm, the 8th largest accounting firm in the country. We are excited about that merger. We share the same values and culture as CLA. Our client base, the type of clients that we serve is pretty much the same as what CLA serves. Government practice is the third biggest industry that CLA serves, and throughout the country, CLA serves about 3,500 government clients. As far as us serving our clients, the teams are going to still be intact. You're going to be served by the same people. The fee is going to be the same, so you're not going to see any change. But what is going to be great is that now we are a lot bigger firm and have more resources for our clients and staff. So that's all I wanted to have for my presentation here. And the very last slide has my information and Matt information in case there are any additional questions after we are done with this meeting.
Questions, everybody? Anyone? Comments?
I have a question. Let me turn my camera back on. There we go. Thank you, Nicoletta. So I just had one question on the collections. The rate dropped from 98.66 to 98.11, which still seems excellent to me. But I guess I have really twofold question. One is, what is an excellent collection rate? And the second question is, did you, because of the year we've had, did you see a drop in collection rates, across all of your clients? And if so, what was that rate?
So as far as what is an excellent rate, there can never be a perfect 100% rate, but you are almost there. And as far as comparison to other clients, what happened? Across the towns, we actually have seen only slight decrease in collections for June 30th, 2020. And that's probably because of the timing that most of the collections for the year were already done. The changes will probably be more pronounced maybe for fiscal year 2021, and maybe Marsha could give those numbers to where 2021 stands. But as far as what we saw across the state for the clients that we audited was slight decrease on the collection, but nothing significant from what my experience has been so far for this year. And Marsha, I don't know if you want to add anything for.
I would just say that with the delay in when taxes were due to October, and I understand this is true across the state, that most municipalities didn't see most of their taxpayers waiting until October to pay. So that's really amazing, I think. As for this year, we are well above, as of December, we were well above 50% in collections. So that also is amazing, since the second half payments weren't due until January. And most people, I would think, would pay towards the end of January and into the first day of February. That didn't seem to happen this year.
Yeah, we were actually surprised to see kind of across the state that the rates stayed, they went down slightly, but not by much.
Thank you. Other questions? Okay, I'm not hearing any. If anyone's trying to speak, please unmute yourself. Okay, so I had a couple of questions, maybe more than two. One related to the one that Councilor Ingalls asked. And I think what I heard all three of you say is that, yes, there was a slight decrease in collections, presumably due to the tax deferment program. But I want to confirm that the deferment is reflected in these numbers, so that if some taxpayers did choose to defer their taxes, then that does account for part of the slight decline that we saw. And Marsha's nodding, and so are Nicoletta. So
that's correct. Yeah, that's correct.
Okay, all right, thank you. I just wanted to comment and really clarify when we say, when you use the phrase no compliance or internal control finding, that really is a good thing. It sounds to the layperson like, hey, this town isn't complying and there's no internal findings going on. But really what you're saying is you found no compliance issues and there were no internal process findings.
Correct. So that's a very good news. The report was clean. There were no compliance findings and no internal control findings. I know it's accounting language, but that's what we refer to them as. Okay,
thank you. We've talked in the Finance Committee in the past year and perhaps the year before about responding to the management letter, because an investment in an audit is not only required, it's a good investment. And for all of the work that you all do, the management letter for us as managers, or for the town employees and staff, is really where we need to do better. So the Finance Committee had talked about responding to the management letter and saying, so, these were the recommendations and the findings from the auditing firm, and this is what we've done this year to implement or not implement those findings. So my question is, do you recall that we did do that? We did send a letter of response to the firm this past year.
We've had discussions with management, no formal communications, but we did discuss during the audit with Marsha. We went over all the findings, where they stood, what they had done so far, and not all of them were remediated. And this was kind of tough year for everybody, trying to keep afloat with day-to-day activities. But we've seen improvements in the town and Board of Ed. but there are still items to be improved. That's why they are still staying in the management letter.
Yep, good. Okay, thank you. And I did receive a letter from Marcia tonight. Go ahead, Marcia.
Go ahead, that's what I was going to say.
Yeah, so Marcia has sent us a letter tonight that I haven't fully read, but there were some comments, and yes, we agree, or no, we haven't done that yet, but we're working on it, things like that. So I'm happy to see that. I wrote a note about the allowance for doubtful accounts, but I honestly forget what that was. So I'll skip that question. That's all my questions. So I'll open it up to anyone else if you have comments or questions. Okay. Well, once again, we want to thank Bloom Shapiro, now CLA. We deeply appreciate the advice and the guidance that you provide. The process has gone so much more smoothly in the last few years with your firm. So we do appreciate that, and Director Hancock is very complimentary of the process. So thank you for everything that you do.
Thank you.
Thank you.
Okay, so we're going to move on. I want to thank Bloom Shapiro, and our next agenda topic, and you do not have to stay. You're welcome to, but feel no commitment to stay on. We're going to talk about just general planning between the Board of Ed and the Town Council and the general government for the coming budget year. So,
thank you. Everybody have a good night.
Okay.
Bye.
Thank you.
Thank you.
Thank you.
Thanks for coming.
Thanks.
Go.
So I thought I would start with the budget letter that we sent out at the beginning of the year. And I asked Marcia, and thank you very much, Marcia, for responding so quickly. We had noted some things in our budget letter that are challenges for this year. And given the flux that everyone is in, I thought it would be helpful to update those bullet points. So if you all have no objections, I'm just going to read out the bullet point and then the comments that Marcia provided with me. And I'll go through it quickly. So the first bullet was that state revenue figures are unknown at this time, expected to remain flat. Marcia responded that we're still assuming flat revenues other than the Pequot Fund, which we expect will decrease back to $850,000 for the year because the $500,000 increase we saw was a 2-year bump. The mayor is working actively to see if we can extend that bump. Second thing, we said we would have to accommodate the mill increase for the new police headquarters. Debt payments are scheduled to be completed in 2036. There's no change to that. We said we expect we will see a continued mill rate increase in the coming fiscal year for the school addition and renovation. And based on the current mill rate, the debt payment for these projects is expected to increase the mill rate by an additional 1 mil. And Marcia updated that, saying we should clarify that the value of the increase in debt payments is approximately equal to 1 mil, but we may not actually need to increase the mill rate to accommodate this increase. And I'm not completely understanding that, Marcia. Does that have something to do with the reval?
Yes.
Yeah, Marcia's nodding. So because we just come through a revaluation, we may not actually see a 1 mil increase just because the mill rate will change due to the reval. And the net grand list went up, as I recall. So if nothing else changed 1 year to the next, we would see a decrease in the mill rate, correct?
Correct.
Because of the increase in the grand list. Yep, okay. Valuation for the required pension contribution is up 3%, resulting in an increase of $32,000, almost 33. No change in that. Healthcare costs are expected to increase as they do every year. This year's increase is forecast to be approximately $320,000 or 5.5%. And this is a big one. We're now looking at a potential 9% increase based on newer guesses from the healthcare consultants, but Marcia believes it won't be a full 9%, but this is one of our larger budget items. So that is significant. almost doubling our healthcare costs. No change in contractual increases, no change in recycling revenue, which is no longer a thing. And maintenance and transportation costs increased last year due to the new school buildings. I didn't see a comment on that, but I assume there's no change. And those are all the points. Last thing was I had asked about the state budget gap. I've been reading some things that it may not be as bad as was originally predicted. And Marcia confirmed that the state is now projecting a surplus for the current fiscal year, lower than the previously projected deficit. So that is good news. And that is our update for the coming year. No huge changes, increase in the healthcare costs and a potentially better outlook for the state's finances. And with that, I will open it up to comments and questions. Councilor McGrattan, and you're mute. Still mute.
Okay. In the
There you go.
very beginning, you talked about an increase in the healthcare cost, but I didn't quite get I didn't quite understand what you were getting at.
Yeah, so healthcare costs have been an unknown due to COVID. We were originally expecting an increase of 5% or so, or $32,000. And the most recent estimates have doubled that to about 60,000. And Marcia thinks it won't be quite that bad, but still that is significant.
Is that due to COVID, that people are contracting COVID?
I don't know for sure. Do you know, Marcia?
I don't know.
Okay.
Personally, every year we deal with this. We don't get any kind of real numbers until late February, early March, and no final numbers until April. And the state partnership just holds all their numbers tight. And they don't, even our healthcare consultant can't really shake any kind of information out of them. Okay. We do have a 1.5% that we are, I think it's a payback for previous year that was especially bad, and they amortized it over a couple of years. Is that right, Mayor? I think that's.
Well, you're talking about like the experience number that we get regionally?
Yes.
Yeah. So what they do is they break it up based on, I think, 6 or 8 sections of the state, and depending on the claims level of that area, they adjust the following year's premium based on that. So our specific area, New London County, had a higher than usual claims rate last year. So they added a 1.5% increase to try to equalize the state pool.
Okay, thank you.
So I recall at one point during the past year when COVID first hit, in the first few months, there was thinking that actual healthcare could go down because people were postponing surgery and a lot of other elective items. But I have to believe that's going to catch up with us, if not sooner or later, because those people are just afraid to go to the doctor or the hospital or anywhere else, and we'll eventually be seeing those claims. Question is when. So other questions? Thank you, Mary. If anyone is talking, I think everyone's mute, so we're not hearing anything yet. I'll give it another couple of seconds. Mike Bronner, do you have anything that you want to share about what you're seeing on the Board of Ed side, enrollments, extra costs due to COVID, extra costs due to being in session as well as remote? What are you guys saying?
Yes, Bill. So generic. Yeah, I'll let the superintendent talk to some of the specifics that are in our current budget, proposed budget that has been delivered to the Board of Ed and we're currently reviewing. And of course, the board members are generating questions for us to provide to the superintendent. Budget timeline from us, and then I'll have the superintendent provide some of that information. Again, we currently have the proposed budget from the superintendent and the staff. That proposed $33,671,969, which is a $482,549 increase, roughly 1.45%. It does reflect 5 teacher retirements, but we will be retaining those FTEs. And it has, of course, our agreed to contractual increases. The board will be holding a public hearing as part of our process and timeline on the 3rd of February. And then the board, both finance committee and then the full board, will discuss and take action on the 17th of February, which enables budget from the board to the mayor on the 22nd of February. There are some drivers that we are seeing in the proposed budget related to enrollment, some of the special services needed for students and math interventionists and pandemic related supplies. But I'll let Superintendent Hartling talk to the specifics on those.
This is Mr. Hartling. Just a note about enrollment. I know it's been a conversation over the last few years. You know, over the next 6, they were projecting us to increase about 6% in our total enrollment. This year with COVID has been an amazing anomaly. We saw about a doubling of our homeschool enrollment. We also were asked to, or required by the state, to stand up a fully online virtual program, which our teachers have done, added that to their list. We did not have the financial wherewithal to add additional staff to run online programming, given our per pupil allotment. We also saw about 30 some odd fewer kindergarten enrollments this year. So we know the students exist. They let us know that they were going to enroll and then they elected not to. Kindergarten is not a compulsory grade. So next year we're walking into a situation where we expect a significant portion of the increased homeschoolers to return, assuming things are coming back to a little bit more to normal, as well as this uncertainty about what happens with those 35 kindergarten students, which would now either revert to kindergarten or first. So elementary enrollment projections, Ms. Hogston did a great job looking through that and running scenarios. We're seeing as going back to where we were last year, and then we'll continue to project out. We'll be doing another look at enrollment in the next 2 months, but there's just a ton of uncertainty with that, given the moves in K and with homeschoolers in the district. We also had an impact on high school enrollment, and you know, the number of students that are opting out of instruction is pretty dramatic in all levels. So it's been a very uncertain time, and we'll continue to try to plug that in, all recognizing that there is a finite resource right now, and our per pupil funding does not give us much wiggle room, if you will.
Jay, what does it mean when students opt out of instruction? Does that mean high school students are not continuing their education, or they're not? No,
they're not present during the day, so they're not coming into school. They're fully virtual, which again, the teachers have to provide that learning experience for those students, and the state was mandated how we would, or what we would provide. And, you know, again, other districts were able to fund additional teaching positions to support that, and that's just not in our cards here in Ledyard. So we worked with the teachers union on adapting Wednesdays a little differently to try to give them some time to service those students as well. So as we always do, we're making do with the resources that we have available to us.
Well, we thank our unions for that. Certainly a challenge trying to manage two different environments and then a third environment where students aren't participating in person. And I understand why a parent would want to do that, but it's a huge challenge. So thank you for all that you're doing. Anything else to add?
Just real quick, Mr. Sons, before we move.
Yeah.
I just wanted to add in Mr. Favory, the board chair, is online as well. We missed him during the initial roll call. He's on, I believe he's just dialed in by phone.
Yeah, he texted me via chat, and I've got him on the roll call. So Anthony, if you have anything to.
No, hi, Council Soms. The only thing just to add on to what Mr. Bronner mentioned and the superintendent, I think, outside of the increased numbers that Mr. Bronner shared, the 482K, I think, and we'll share this. I know we typically coordinate a presentation before town council once the board has adopted the budget and it's been passed through finance. But of that 482, 470 is tied to pure contractual increases. I think that's important because that's the biggest aspect, as always, from a budgetary standpoint. And then, Mr. Harling, I know we've talked about the per pupil expenditure, and for Ledyard, we'll share numbers, Council Somm, with you and the entire town council. But for Ledyard, it's still around 15,000. So we went up just slightly from last year, which the funding that was allocated to the track and field helped contribute to that. But the Superintendent Harling, for where Ledyard resides in a per pupil from a ranking standpoint, I'm trying to look at my notes. What is the updated number that you just had recently shared?
I think it's 155 in the state in per pupil funding. And we have that broken down in our budget book pretty clearly. And I know we bristle against comparisons, but I think it is really important for the taxpayers in town to understand how hard we're working to provide an educational program in the town. And it often causes us to make choices that, when you look at other school districts, that they may choose to operate differently. And one of the glaring right now during COVID is the ability to hire additional educators to support online learners separately. As we look at different pieces, everything we're adding are essential elements related to our program and quite frankly required. And we're trying to get things shored up that all of our students are getting the education they deserve.
I do find that comparisons are extremely valuable when it comes to the taxpayers, because education is expensive. And if we have nothing to compare it to, we could, as taxpayers, walk away with the idea that we're spending too much. And I think it's important for taxpayers to know what they're getting for their investment in taxes, or for what they're paying the town in taxes, and that it compares very favorably to the rest of the state. For years, we've had a very low cost of education, whether you look at per pupil or you look at the cost to the taxpayer. $15,500 a year. I think that's what it was a year or two ago, and that's a lot of money. But man, there's other districts spending way more than that, and we are near the bottom of the list in Connecticut. And on top of that, I think we have an excellent school system. So,
well, Councilor Soms, this is Mr. Harling again. Just to, the per pupil number is interesting. Had we not executed as Mr. Favory said, had we not executed on the track and field project, and we greatly appreciate that support, our per pupil funding would actually have dropped even lower and would have put us in, I think, the bottom 3 in the state. So I think oftentimes there's a misunderstanding of per pupil funding, but that actually includes all money spent on public school students, including those things that are noted by the town as going towards supporting the school district. So any quote unquote gifts in kind. So it's a complete capture of all the expenses related to education in our community. And again, without that track and field project, we would have dropped pretty significantly. I think it had contributed $900 to our per pupil for last year's numbers, or right around there. And we would have been in, you know, the 162, 163 range for the state. So it's just something kind of as a discussion point to think about as we continue to work to make sure we're maximizing efficiency. You know, I did share with the board that we are, you know, after 4 years, you guys have heard me enough, but we're really at the point now where I don't have a lot of options and go-to points. This year is the first year where, you know, even efficiencies with regards to programming for special situations has required us to allocate additional funds, et cetera. So we've exhausted a lot of the moves that we could make, and we're going to continue to work to provide better quality programming to all of our students. But you know, the contractual increases alone are a 1.3.5 for this district each and every year. So.
Yeah. Thank you. Okay, anyone else? Chairman Davis, Mayor Allen?
I think I'll be prepared with Marcia to review the general government budget work to date tomorrow at our regular finance meeting. We just finished our department head meetings, and so we still have to work on polishing those up, and we'll discuss that tomorrow at the regular meeting.
Okay, sounds good.
One more quick thing, Mr. Soms. I did want to go back and thank Mr. Fabry for adding in that data point. I did have that down here to come back to, but he covered it, that of our proposed increase that the superintendent and the principals have put forward, $470,293 of that is contractual increases on the staffing. So that's an important number. We can reduce some areas down with efficiencies to help offset other increases that are needed, but that number is what it is, and it's right around 1.3%, 1.33, as Mr. Hartland stated.
Very slim margin. Thank you, Mike. And thank you, Chairman Fabry. Okay, if there are no other comments, I will close this special meeting of the Ledyard Town Council Finance. Oh, one more?
Actually, yes. Wanted to also mention as a information item for Town Council, the letter will be forthcoming from the Board of Education from Mr. Fabry. I know has a letter in progress to sign out related to an ASTE request to Town Council. We had 2 items that the Board of Education has approved to send to town for funding. One of those was for the barn. So the barn that supports the large animal care program. It's about 12 years old, and the roof, of course, now is leaking, causing potential approved at the board level, and that'll be in a letter coming to Town Council. Not to exceed request for $29,237.50 to go ahead and repair and replace the parts of that roof that need to be taken care of to reduce the leaking. The other part of that request that'll be coming is related to the air conditioning system. So when the ag science section was built, it was retrofitted for cooling. This request is to complete that system. And again, that is also a not to exceed request for $26,500. I would assume that letter should come over in the next couple of days.
Okay.
We didn't want that to come in blindly, since we haven't had a chance to get together and talk about that.
And this is Mr. Harling. Just to be clear, the ASTE grant was under budgeted by $159,000, and so as we have done the last 2 years, I think, or maybe even 3, we work to put together a capital needs project package that will utilize those ASTE funds in a responsible manner. So that's where that's coming from. Just to contextualize it a little bit for everyone.
Got it. We'll look for that. Thank you. Okay.
Hey, Bill.
I'm ready to, yeah, go ahead.
This is Tom Malone. You know,
Hey, Tom.
so for the barn project, I would recommend, and it just may be a shot in the dark, is get with some of the ag parents and see if you can start a GoFundMe and make some of that gap up that way, and just see what you get. You know, can't hurt for trying.
So this is
Okay.
Mr. Hartling.
Thank you, Tom.
Our ag side parents are incredibly supportive of the program, and you know, I think we look at all those pieces. I would just note that the funds related to OSTI, we have to report to the state that we've spent those on OSTI related projects, and the barn project, I think, is not to exceed around $30,000. I just note that the barn has been in our possession, I think, 12 years, but we actually bought it used and had it reassembled, and so that the roof is much older than 12. Just for clarity there. But I think we can take a look at all those things, Tom. I think that's a great suggestion.
Thank you, Jay. Anything else before we close?
No, we just this is Mr. Bronner again, Mr. Soms. I'll coordinate with you on firming up that date for the Board of Education budget presentation to Town Council after the board passes that budget. Our let me one sec here. Our notional timeline. Trying to keep papers sorted here. We currently have that for Wednesday the 24th for a planning from a
Lost you, Mike. Last thing I heard was Wednesday the 24th.
That's the notional date we have in our timeline. I'll coordinate with you to firm that up so we make sure that that's a date that's supported by Town Council and get on the agenda for that.
Okay, please add Roxanne on that because she manages the calendar for all of us.
I'll put an email together tonight or tomorrow morning to you and Roxanne. And as part of that standard briefing we do on our, that'll include any of our capital non-recurring discussions as well related to the capital improvement plan and funding.
Got it. Sounds good. Okay. Anyone else? Last call. Is there a motion to adjourn for the Ledyard Town Council Finance Committee?
So moved.
Is there a second?
Okay.
Second, Councilman Malone.
Yep.
Thank you, Tom.
Go ahead, and for the Board of Ed Finance Committee, I move that we adjourn the meeting. Do I have a second?
Second. Second,
Thank
Mike.
you.
Okay, we are adjourned without exception. Thank you, everyone. Have a good night.
Thanks, everybody.
And see some of you tomorrow night.
Okay.
Good night.
Bye.